they would typically look like. So if we're looking at interpreting text in today's society, jurists will look at the culture of the society. They look at the tradition of the people. They look at what Islamic law is trying to achieve. So we don't just interpret. Ijtihad is not just based on a theoretical understanding. It takes into account the community, the tradition of the people that are actually interpreting it. Then we have the qiyas. Qiyas is analogy. So if, for example, something has happened previously and there's a new thing happening today, then the scholars draw comparison between what has happened in the past and today. So for example, in the time of the Prophet Islam, there's a concept of family planning. The Sahabas used to do withdrawal method. So the scholars today will then say, let us look at the concept of family planning. If someone were to use a temporary method, would that fall under the objective of Islamic jurisprudence? So that's where qiyas come in. So people compare similar events and try and draw a ruling out of it. So that's qiyas. And lastly, we have ijma. So just to point out, when we say consensus, consensus is not consensus of ordinary Muslims, people without the knowledge. So you don't say that 20 or 30 people or 1,000 Muslims come together and give consensus. It has to be guided by a jurist, by an agreement of a jurist, a scholar, someone that knows what they're doing, right? So you don't just say any collection of Muslim would give ijma. So that wouldn't suffice for the purpose of secondary legislation on the Islamic law. So having said that, we then move on to the difference. I just want to sort of set this out. The differences between Sharia and fiqh. I think it's sort of important to know that Sharia is based on defined prophetic sources. Sharia is more like general principles and maxims. Fiqh is a reflection on Sharia based on human understanding. It allows humans to bring in their knowledge. It allows us to bring in our deliberation. It allows us to bring in explanation, and it allows us to bring in prescription. So it looks at human as a whole and kind of bringing out reasoning, our understanding and interpreting Sharia. And that's what fiqh is all about. Whereas Sharia is based on maxims, general principles, and they're based on the Quran and the Sunnah. And Sharia usually would cover matters of faith, moral conduct, and laws. Whereas fiqh will cover things things wider things like human affairs, worship, financial activities, family affair. So Islamic finance is a subset of fiqh. So that's the end goal. I want us to understand that Islamic finance is a subset of fiqh rather than a subset of Sharia. And that's why we can bring in innovation into Islamic finance. Now, what are the main principles that affect Islamic finance? The first thing is that in Islamic finance, there should be something we call freedom of contracts. So people should be able to enter into contracts. I should point out that I would not discuss the details of contracts in Islam. How is a contract void? What invalidates a contract in Islam? Inshallah, I'll talk about that next month, if Allah permits. But this week, just for us to know that Islam allows us to contract into people freely, provided that we avoid the prohibited elements of contracts. The second aspect of Islamic finance is that Islam prohibits Ribba. Islam prohibits Gharar. And lastly, other key principles. Would explain each one of these in details. So, prohibition of Ribba. What do we mean by Ribba? Ribba is an increase in a loan transaction that accrues to a lender without provision for a counter value. So what do I mean by this? If you enter into a transaction and the terms of the transaction allows for the interest of one party to increase without provision for a corresponding increase on the other parties, that would fall under Ribba. I know this is not very clear, so I'll put that into simple terms. If I enter into a contract with you and I say, no matter what happens, my money would increase. No matter what happens, I must make profits. Whereas to the other party, no matter what happens, their interest will remain the same. So then that would fall under the remit of Ribba. And Ribba is prohibited by Sharia. I think I still need to break that down. So if, for example, you enter into a loan transaction or a money transaction with someone, and you say to them that you're going to pay me XYZ amounts. Say I give you 50,000 to invest in something, and I say at the end of it, you pay me XYZ. What if there's coronavirus? As a result of coronavirus, I couldn't sell. So what means is, no matter what happened, I still have to pay you back the principal amount, and I still have to pay you something in return. Whereas for me, whether there's coronavirus, whether there's economic benefits, if the economy were to pick up again, I don't get any benefit. I still have to repay back the loan. Then that would fall under the realm of Ribba. Or if someone were to sell you loan at discounts. So for some of us that work in the financial service sector, we would know, for example, someone might sell a loan transaction, i.e., if you were to take a loan at 10%, and someone would say, okay, let me buy back the loan from you and sell it back to someone else at 6%. So that would again fall under the Ribba realm. So anything that provides for profits or benefits, but that is not linked to, say, a real asset. So if you're getting increase, you're getting benefits, you're getting profits, but that profit is not linked to an underlying asset. For example, it's not linked to the performance of a house, it's not linked to the performance of a trade, you're buying a phone, you're selling phone, or it's not linked to the performance of maybe food stuff, or actually it's not linked to the performance of anything other than the fact that you've given out the money itself, then that would fall under Ribba. So good illustration is our credit card, the loan we take from banks. All this falls under Ribba. So there has to be, for you not to fall under the realm of Ribba, there has to be an underlying asset, there has to be allocation of risk, and also there has to be shared benefits within the arrangements. So in Islam, we have two types of Ribba. So the first type is what we call Ribba and Nasir. This is the primary form of Ribba. So it's the first one I've sort of explained. So it is when you pay an interest on a loan, and it is also known as the Ribba al-Quran. So it's the Ribba that is primarily prohibited in the Quran. It's the Ribba that was practiced at the time of the Prophet. It's very profound, at that time. People give out money and then they get something on top of it. So that's the first aspect of Ribba. And I think most of us are aware of it. So, perhaps if we were to break it down, how does Islam sees money? Islam sees money as a capital, as a potential capital. That's what Islam sees money as. Islam sees money as a potential capital, not a real capital. Money becomes a real capital in Islam when it is invested, when it is mixed with other resources. So money itself, it's not capital in Islam. It has to be mixed with other resources before it becomes capital. So if you're getting benefits, if you're getting profits, if you're getting anything on money itself as a capital, as a potential capital, then that will fall under the realm of Ribba. So whether you give it out or whether you take it, then that will be Ribba. Because what your benefit is based on is the money, not the performance. So this is the type of Ribba that most of us might not know. It's what we call excess compensation. So if, for example, I were to say to you, I'll give you maybe 2 tons of gold, but you give me back 10 tons of silver. And perhaps I'm getting an excess compensation for what I'm giving you. If I were to give you 2 cow and I'm asking you for 10 cow, perhaps that is an excess compensation. So anytime you get something in excess of what you deserve of, when you're exchanging goods and you're getting in excess of what you deserve of, that would fall under riba as well. So there's an hadith of the Prophet that says that gold for gold, silver for silver, and I think the rest of it you can see. The reason why the Prophet mentioned these 6 commodities was that at that time, those commodities were something we call robawi. So they're things that you could easily exchange them, for it's equivalent of money really at that time. So you could exchange them for one another. So the purpose of this slide is just to tell us that whenever we get any benefits, any profits, any advancements as a result of the performance of money itself, then that would fall under riba. So for us not to be, for our interest not to fall under riba, then it has to be linked to an underlying asset. So there has to be something that is performing. I'll give us a good example of it. So I think in the last 20 years, most of us have had of bonds, right? Whereby we buy government bonds. So the government will say we want to raise money for the economy and we're selling bonds. So governments will sell you that piece of paper. They give you that piece of paper and you pay money to governments. Then at the end of it, maybe on a yearly basis, the government will give you 6% interest. So 6% interest, it doesn't matter what happens to the economy. It doesn't matter what happened. It's fixed. You get that 6%, right? So that is interest. That is riba. But I think in the last 10 years, many people then say, how can we integrate Islamic finance into our economy? How can we make something that looks like a bond but complies with Islamic ruling? And that's where we have something we call sukuk. So what sukuk does is that the government says to you that we want to raise money, say 10 million pounds, but this is how we'll raise it. So the government will then say, we will sell the roads we have. Say the government has, I don't know, maybe the road from Dagenham to Barking. So the government will then say, we will sell that road to you. So the title of the road passes from the government to you, but the government will then rent back that road from you, and the government will then pay you a rent. So rather than paying you interest, what the government pays you is a rent. So maybe to make it easier, let's use a house as an example. Use an office. So if government were to raise money through bond-like scheme, so the government will say, we're raising 10 million pounds, but we are using this office as a collateral. So the title of the office is passing to you as investor, but we'll rent back the office from you and we'll be paying you rent for the duration of the loan. So at the end of the sukuk, the government will then take back the office and you get your full money. So rather than getting an interest, which is fixed, you're getting rent. And I'll tell you the difference. The difference in the second one is that it is linked to an underlying asset, i.e. the house, the office that the government owns. So the government is passing over the title of the office to you. So you actually have that office. Whereas if it were to be bond, there's actually nothing passing to you. It's just that piece of paper you have. And Islam doesn't want that. Islam doesn't want us to put value on money because money itself doesn't have an intrinsic value. So the value has to be moved to an underlying asset. I'll tell you the second difference. The second difference is that you're taking risk. So if the government were to pay you 10% rent this year, if the property value were to drop, significantly by 20%, so the government won't pay you 10% this year and next year anymore. They'll pay you 5% because the rent is falling, because property market is falling. So you're actually taking on risk. Whereas if it were to be the bond system, you're getting a fixed return no matter what happens to the economy. So Islam doesn't want that. Islam wants fair allocation of risk and reward so that we can all, have an equitable system. So to brothers and sisters, if you have a fixed deposit account, that will fall under Ribba, and that save us from it. I won't go over all the Quranic verses that prohibits riba. But I would mention two things. The first one is in Surah Al-Baqarah. Allah says, whoever takes on riba, it's as if you've taken harm, you've taken Allah and His Prophet as enemy. So you're going to war with Allah and His Prophet. May Allah save us from that. And the other thing is that the Prophet says to us that some people fool themselves by saying riba is the same thing as transaction. There's a difference between trade and riba. They're two different things. So we shouldn't confuse that. The implications of riba, I don't even think we have the time today to go through it. But the implication is profuse. On the day of Jahannam, may Allah save us from it. Whoever consumes riba would have himself to blame on the day of Yawm al-Qiyamah. One of the greatest sins that you might torment you on Yawm al-Qiyamah is actually taking on riba. And Allah has mentioned it on a number of times in the Quran, which I don't think we have the time to go through every one of them, but it is something very important. Now, the second aspect, fundamental principle of Islamic finance, is something we call gharar, which is unnecessary or excessive risk. So uncertainty, ambiguity. So going into transaction that you know nothing about, you don't know what you're buying, you don't know what you're selling, you're just taking excessive risk. I don't know the reason why we have financial crisis in 2008, but I can tell you the contributions, things that contributed to the financial crisis. The primary reasons or the primary contribution to financial crisis is something we call subprime mortgages. Perhaps some of you have heard of it if you work in the financial service sector. So it's just that people take on excessive risk, uncertainty. People were betting on mortgages. And that was why we went into financial crisis. Coming back from financial crisis, people then realized the importance of Islamic finance, how just that system is. And in the last 10, 15 years, the industry has grown enormously. We're now in about $2.something trillion in terms of the size of the industry. So coming back to gharar. So gharar, and I'll give you a good example of it. I think about a couple of months ago, I wanted to do some work on a property of mine, and I invited my brother to help me. And I said to the brother, you're going to do X, Y, Z for me, and how much is it going to cost me? The brother said to me, oh, don't worry, mashallah, I'll do it for you. And I said to him, how much is it going to cost me? And he said, don't worry, I'll do it for you. And then he finished the job. And after the job, I asked him, how much is my price? And he gave me an exorbitant price. And I said to him, how can I pay you this? A week ago, I paid someone else for, to do something for a whole day, less than what you're asking me for. So my point is, at the start of the transaction, there's something we call gharar. There's uncertainty about the price. I failed to establish what the price is, and he failed to establish what the price is. And we've reached the principle of Islamic finance. We wouldn't have had the problem we had if we had followed the principles of Islamic finance, if we establish what the price is. So if at the start of the transaction, you don't know what the price is, you're not sure about the payment terms, you're not sure about what you're buying. It's so funny that people buy things, they don't even know what they're buying. So people order from China, they don't know the content of the goods. People buy something from various bodies, they don't know what it is. So that will fall foul of Islamic finance. So things for gharar could be the subject matter, things you're buying, you don't know what you're buying. The price, you don't know the price of what you're buying. The person you're buying from, you don't even know who you're buying from. Sometimes it's fundamental that you know who you're buying from, especially when it has to do with services. If someone is going to teach your kid, it's important you know who the teacher is, isn't it? So it's important you know who's delivering the service at that point. So, it's important that we get clarity as to the subject matter, as to the price, as to the object, in order for us to satisfy the principles of gharar. Because if we don't, then at the end of the day, one party would perhaps exploit the other. So the implication of gharar is that it leads to deceit. One party tries to defraud the other. So the other thing is something we call qimar, which is gambling. So gambling is also at the heart of risk, The financial service sector, the reason why we have problems is people gamble. People gamble on the economy. People gamble on the currency. At the time of Brexit, one of the reasons why the pound suffered was because people were gambling on the pounds. People were gambling that we're going to have a deal with the European Union. People were gambling and we're not going to have a deal. That led to the pounds falling excessively. So gambling is actually one of the things that Islamic finance prohibits. The second thing is speculation. So, people speculating without having a knowledge base of it. So people that trade on the market, they speculate and unnecessarily. So Islam doesn't want us to speculate. It wants us to make decisions based on a sound knowledge. So these are examples of Garar and Islam prohibits. So the point of the slides is to make sure that when we're entering into a transaction, we're clear who we're buying from, what we are buying, what the payment terms is, and what the price is. Otherwise, we deceit and would fall foul of the Islamic finance principle. So some of the key features of Garar is what we have here. So the first one is the subject matter, which I mentioned earlier on. So if the subject matter is not clear, then the transaction will be invalid for Islamic finance purposes. So under the Islamic finance rule, if we're not clear about the subject matter, then the transaction will be invalid. The time period, we should be clear. So brothers, if you're buying from someone and you're saying to the sister, I'm paying you in 2 months, be clear. If you're not paying now, be clear as to when you're paying. You just don't buy goods from someone and say, oh, I'll pay you whenever. That's Garar, because you're not certain as to when the payment is coming. So you need to know, one, what the payment is, and also when the payment is coming. And another form of Garar is that when someone doesn't know about the market knowledge. So this is very often, people try to exploit one another. Say someone doesn't know the price of beans in the market, and you know the price. And because you know they don't actually know what the price is, you try to sell it to them at an excessive price. Or because someone is in Nigeria, you're in the UK, and they want to buy a certain commodity in the UK because they don't know the price of it in the UK. They don't have the knowledge, the market knowledge. You try to exploit them. So Islamic finance doesn't want us to enter into transaction with people. Only enter into transaction with people when you both have market knowledge. You know the price of the good in the market, they know the price of the goods in the markets. Otherwise, we'll fall foul of Garar. So what are the other key principles? So we've said Islam forbids Ribba, Islam forbids Garar. What other things does Islam forbids? Islam wants us to be honest. It goes without saying that Islam doesn't want us to operate black markets. People a few weeks ago, people were hoarding toiletries and whatnot. So those are the things that Islam doesn't want us. Islam doesn't want us to manipulate weight. Allah says in Surah Al-Mudaththir, where Allah calls people that manipulate weight. They sell at a certain weight and they buy at a different weight. Yeah. So Allah doesn't want us to manipulate weights. And also, when you're selling a good and it has a defect, don't conceal it. Let people know. If it has a defect, tell them. If you're not going to tell them, then tell them to inspect it or keep quiet. If you know it has a defect, don't lie about it. Is it that you say to them, buy it as you say it? It's up to you to inspect it. If you find defects, fine, but just don't lie about it. The other thing is money should only be used as a medium of exchange. Money shouldn't be used as anything else. Islam does not want us to treat money as capital, but rather as a potential capital and needs to be mixed with other things for a productive economy. Actually, Islam espouses the need of having a productive economy. Islam does not want you to have cash sitting around. It wants the cash to be invested in the economy. There should be full disclosure. Tell them what you're liable for, what you're not liable for. If there's a defect, say it. Islam does not want us to trade in forbidden items, i.e. alcohol, pornography, gambling, pork products, things like we all know about. And lastly, which is something I mentioned earlier on, Islam does not want us to exploit market knowledge. So if there's information asymmetry between the parties, if you have a better knowledge of the market, don't exploit it. And also something that is very common in our community, when we know that someone is in distress, someone is selling out of duress, we're trying to exploit them. Islam does not want us to do it. So someone is selling their house, their car because they have a problem, i.e. forced sales. Islam does not want us to take advantage of that. Rather, Islam wants us to help them, give them qarda asana, give them good loans, rather than, loans without any interest or any other restrictive conditions. So we shouldn't take advantage of people in duress. So we've talked about the key constituent elements of Islamic finance. Now, what are the elements of Islamic finance? So let's split the Islamic finance industry. So the Islamic finance industry can be split into 4 aspects. I think I'll probably cover that. Okay, yeah, I think this is the slide. So the Islamic finance industry kind of can be split into 4 key areas. The first one is the Islamic banking. We have the Takaful, which is insurance. We have the Islamic capital market. Shall I take this one after the other? So Islamic banking. So in the UK today, alhamdulillah, we have about 3 banks that offer Islamic products. So these are fully fledged Islamic banks. So these are banks that operate under the guidelines of Sharia. However, sometimes you can have an organization that offers Islamic banking under 3 different organization models, i.e. a conventional financial institution could offer financial products in 3 ways. So the first way is window model. So what do we mean by a window model? Some of you might recall, maybe 5 years ago, Lloyds Bank used to offer Islamic currency accounts. So this is a model whereby a conventional bank would offer Islamic finance as a product through the same channel as they used to offer other products. So, I mean, I think those 5 years ago, I used to have an Islamic currency account with Lloyds. Also, I think HSBC used to have an Islamic mortgage, sort of, maybe 7 years ago or something like that. So that's kind of what we call window model. So a conventional bank offers Islamic product through normal channel. And the second thing is the branch model. So the branch model is a conventional bank would then say, this one branch would offer only Islamic regulated products. So they would only offer Islamic finance regulated products. So I think with Citibank, for example, so Citibank in Dubai and in Pakistan used to have branches that are specific, that only offer Islamic finance products. So a conventional bank would do that. Lastly, you have the subsidiary model. So the subsidiary model is whereby a conventional bank creates a subsidiary, i.e. creates one arm. Okay, how do you call a subsidiary? A subsidiary is a sister company that offers Islamic finance products. I think HSBC does have something similar to that in the Middle East. So HSBC, probably Saudi Arabia, has a subsidiary model whereby they offer Islamic finance products in Saudi. So essentially, our Islamic finance industry operates like the conventional financial industry. So they do investment management, they do retail banking, and they also offer services such as zakat as well. So what are the key elements of Islamic banking and finance? In retail banking, I thought I would give you an illustrative example of the retail banking. So think about a bank and a client. In a conventional banking, if you give out, if you save a money with a bank, say you save £50,000 with them, and they also give you a loan of £50,000. So typically, you pay them an interest on the loan they've given you, and they also pay you an interest on the loan they've given you. So kind of you swap the money. You swap the money with each other, and you get an interest out of it. So it doesn't matter whether you invest the money or you don't invest the money. It doesn't matter whether they invest the money or whether they don't invest the money. You both just have to pay each other interest, right? Whereas in Islamic finance model or Islamic banking, as you would have it, you give out money to the bank or the bank gives out money to you. Usually, the money is invested in something, i.e. you use the money to buy goods and services, or the bank uses the money to buy goods and services. So, for example, say a Royan Bank. we save money with Arayan Bank. Arayan Bank uses the money to invest in properties, and at the end of the year, they pay you profits, inshallah. Or if, for example, they give you money to buy a car, then you use that car to do a business and you pay them a rent or a lease on that car. So it's usually tied to a certain asset, i.e. goods or services. If it's not tied to services or assets, it's not Islamic products. If the return is fixed, if, for example, they say to you, we'll give you 10% no matter what happens, then it's not Islamic finance, brothers. So whatever transaction you enter into someone and you have to pay them certain amounts, no matter what happens, it's not Islamic finance products. So I thought I would mention Takaful briefly now today. So Takaful is an alternative to conventional insurance. So it's based on the concept of mutual support. So, if we as a community, we set up a fund to help each other based on times of need, etc. So that's what the Takaful products is all about. It sort of existed quite in the early times of Islam, but it was never fully developed into what we have in modern era today. So it's one thing. I think it's one of those things that in the West we don't actually really have a Takaful model. But alhamdulillah, we do have Islamic banking, but Takaful is not yet matured in the West. But they do have a bit of that in the Middle East. So it's just sort of an alternative to commercial insurance, and it's based on the concept of mutual support between one another. And as we all know, that conventional insurance is prohibited in Sharia because it contains speculation and excessive gambling. So the Islamic capital markets, I thought I'll mention this briefly as well. So Islamic capital markets is just like the conventional markets. It's just a market that doesn't contradict the principles of Sharia. It's based on the practices, the ethics of Sharia. It's influenced by the Islamic jurist, and I think now we have our first Islamic capital markets model on the in the US markets, the DJIM index. Probably that's the first benchmark for Islamic capital markets. So we do have that now. And there's a growing body of study that sets standard for Islamic finance products on that market. So there is something as Islamic capital markets today. So lastly, in the interest of time, so I thought I would briefly mention how Islamic finance has evolved in the last few years. So the inception period started off in Egypt around 7th and 11th century, whereby you have a group of farmers, they came together and they set up the first savings bank. So what they typically do is that they save money into that bank, and the money is invested in the farming business, and the profit out of the farming business is shared among the investors. And that's the foundation period of Islamic finance. Then it's evolved, into commercial practices. So in Malaysia, around 1975, I believe, then the Pilgrims Board also set up something similar to a savings board, a savings bank, which they used for the pilgrims. So the Islamic finance grew with the setting up of the establishment of Islamic Development Bank in Saudi Arabia in 1975. So that was the first major development bank that was based on the Islamic finance principles. And it gave an outlet, an international presence for Islamic finance. And also Saudi was also the first place that set up the Islamic insurance system, which is the Takaful we mentioned earlier on. So the Dow Jones Market Index was the first benchmark for Islamic capital markets or any Islamic investment fund in the US, and that was around 1999 as well. So the first Islamic bank in the UK was set up in 2004, which was the first time that we would have an Islamic bank in the outside of the Muslim world. So today, in sort of rounding that up, the markets, we probably have about 2 trillion in terms of capitalization of the industry. So, and the industry is growing. the banking sector seems to be the largest sector within the Islamic finance industry, contributing about 71%, but the Takaful is also growing rapidly. So today, the biggest challenge that Islamic banking or finance industry has is innovation. So, in the 2000s, I think the markets, the space of innovation was amazing. But now, because you have, kind of a lot of disruption in the banking system, Islamic finance is also struggling. The Islamic banking system is also struggling to sort of keep up with that innovation. So, in conclusion, just sort of to round up, so the key concepts we sort of established is that Islamic finance is a subset of fiqh, and fiqh emanates from Sharia, and fiqh gives room for innovation, and fiqh is also regulated by the Islamic Supervisory Board in terms of the Islamic finance products. In terms of Islamic finance itself, we said Islamic finance is based on three core principles. First, then, is the prohibition of Ribba. We explain what Ribba is: advancement in your interest without a corresponding increase to the other party. We also mentioned that Islam prohibits gharar, excessive risk taking, and also we mentioned that there are other principles that Islam sort of prohibits as well. Lastly, we talk about the Islamic banking and finance system, that the industry includes banking sector, capital market, Takaful, and non-financial sector. And the challenge going forward is, even though the industry is around 2 trillion, we're concerned that they might not be able to keep pace with innovation. But the growth has been around 8% in the last couple of years. So that's really the introduction to Islamic finance. I'm cautious I haven't talked about Islamic products, which deliberately we are not meant to cover that for today. So inshallah, next month we'll talk about Islamic financial instruments. We'll talk about the Mudoraba, the Salam contracts, and various other commercial instruments within Islamic finance. And subsequent edition, we'll talk about wealth management in Islam, and then we have self-assessment. So being conscious of time, I think we can take questions that covers the introduction to Islamic finance, but we won't go into details of the Islamic financial instruments today, inshallah. Yeah, I think we'll leave it that what we look at the as a straight mistake.
Jazakallah khair, brother, given that very deep presentation on Islamic finance. And I think we've learned some one or two things in that presentation. Loads and loads of information is in that presentation. And we pray to Almighty Allah to increase our brothers. So very soon we'll be going for Salatul Asri around 5:30. So that we'll be back in 15 minutes. So we'll be back in that will be 15:45, inshallah. So we can start making our way to for the Udu now. So then we come back after 15 minutes. Please, brothers and sisters, if you have your camera on, can you just switch it off for the quality of the communication? Yeah.